Everybody, sorry on the slight delay. Hope you all woke up from your naps, from your market naps. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and a member of FINRA SIPC. All trades are placed by me through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. I'm out of my Roku long stock, and I've got some Roku short puts on. Nothing else has changed. I did get into and out of Snap today, and I traded a couple crazy stocks pre-market and made a very small amount of money on it. It was a very boring day. I actually think we did a great job in the morning meeting today preparing ourselves for today to actually be a boring trading session so that we don't push it when the opportunity is not there. Knowing when to trade is half the battle. I don't know if it's half the battle, but it's a large part of the battle. Knowing when to trade is extremely important. Knowing when to take a step back is extremely important. And in the morning meeting today, yesterday, and then probably even more so today, I really just tried to emphasize we are in a market right now of historically positive gamma, the most that there's ever been. That means that your moves are just going to be very insulated. There's a lot of selling into up moves. There's a lot of buying into down moves. It makes it very difficult from an index perspective to get any follow through. In the morning meeting today, I used yesterday's open as an example. Yesterday's open was pretty good. Nice little gap up. Look at this little wedge pattern. ADMA is catching up. You're setting up for continuation, but you're not going to get the continuation because it's very hard for this market to actually move higher with any real momentum. And what we've seen is just a lot of sideways price action. Sometimes we get a little rally into the close with MOCs. But when you combine just the positioning data that we have right now on the market with the fact that there are no real catalysts right now to set us off. There's some upcoming catalysts. There's catalysts on Thursday and Friday with CPI and PPI and the beginning of earnings. But today's not Thursday. Today's Tuesday. You have an SPY coming into today at moderate extension, which also is a difficult spot to buy. It's a difficult spot to short. You got the Qs approaching extreme extension. It just about got there today. I was actually able to make... I forgot to add that onto my position disclosure, but it shouldn't be there because I wanted to close it out. I am also short some TQQQ, which I probably should be out of. I didn't want to keep it overnight. Whoops. Anyway, I missed that one on the position disclosure. I'm still short some TQQQ. Was able to make some money shorting TQQQ as the Qs approached 500, which was exactly the game plan that I mentioned to you guys, that I would do it small, just kind of sticking with my extension rules, even though I really think that there's no real reason right now for us to be shorting this market until we can get some sort of event that can increase some volatility, increase the VIX a little bit, until we can get some of this massive amount of gamma to be able to roll off. You can still get moves with individual stocks, which is why I love being a stock market trader and not a futures trader, because SPYs and Qs are an absolute snore fest right now. But there's still some movement in some certain stocks. Chinese companies a little bit. We're moving. Alibaba, Baidu, we're moving a little bit. We had called for a trade in NVIDIA this morning, and maybe Netflix this morning. Maybe Bank of America this morning. But the biggest and probably best piece of advice was take it easy, don't do a lot, and anything that you do, just do it with less sizing, less risk than you normally would, just because it's very hard to expect follow-through, honestly, in either direction. So the base case of this market, which is just an upside grind, should be exactly what we continue to see today, tomorrow, and until either we get the gamma to roll off a little bit, which, some of it should roll off. Rich, I'm seeing your comment here out of the corner of my eye. Should roll off in that options expiration period. It's always when we see kind of a big drop off. But I remember the June OPEX, we were also at like a historic amount of positive gamma. I don't remember what the number was, and I think we rolled off like half of it, which still put us in like a very high gamma market environment, even rolling off half of it. So most likely in July here we would see something similar. I know Bill mentioned pre-market this morning that Jem Carson, however you say his name, Jam Croissants, is that what his Twitter is? Is calling for really the August OPEX to potentially be a catalyst that can make this market move a little bit, which is interesting because it's in conjunction with a seasonably weak period as we start to go into the election cycle, which also tends to be a weaker time for markets right into the November elections. It's a few months ahead of time as people tend to just want to hedge and not put new bets on. So yeah, I mean that's kind of where we're at. You know, knowing when to trade, knowing when you have an advantage is everything in this game. And I just gave like a very boring morning meeting, and I'm following it up with a very boring afternoon meeting, just because boring is where we're at. And as much as I would greatly prefer for this market to be exciting, it's just not right now, and it means to take a step back. I'm still frustrated, to be honest, just by the lack of opportunity. I don't like how this market's trading, which for me is another reason to not trade aggressively. I do not really, since the beginning of June, I really haven't liked how this market's been trading. I've been talking about it a lot. It's so bizarre to me. We saw it again today at certain points, how you can look at a 5-minute chart of the IWM and a 5-minute chart of the Qs and see that they literally on a 5-minute period of time trade inversely from one another. It's just really bizarre. But that's the environment that we find ourselves in. I've traded many different types of trading environments over the course of my career, a lot of different market cycles, and you know, sometimes you find yourself in new ones, and it is what it is. You just have to recognize what's new about it, and you have to adapt, and sometimes that adaptation just means, hey, I'm going to take a half step back. So my base case for this market, as we're still in this really seasonally strong early July, is that we just continue to move sideways / grind higher unless we get a catalyst that can trigger us lower, which could really set off a feedback cycle of selling. I mean, Pat's note this morning was excellent. There's a lot of really good, juicy information in there. I'll bring it back up. A couple things we noted. One is the spread between the implied versus the realized volatility over the course of the last month is pretty massive right now. I thought that this one was even more interesting. This is something we've spent a lot of time talking about. Single stock volatility is at record highs versus index volatility, which is extremely low right now, but there are still stocks that are moving, so there can be individual names that you can focus on that are in play or whatever. That dispersion trade is still there, which the dispersion trade at this point I'm also starting to find frustrating. But there's opportunities to be able to make money if you're on the right side of all of that. And then you know, the CTA flows are interesting because it definitely shows that, especially when you look at like over the course of the next 1 month, that the flow selling risk is to the downside, but you got to get down there to actually trigger it. You have to have the market go down in order to actually be able to trigger, and the points that can trigger the broader CTA selling are far away. And if you combine that with, I thought there was some gamma data in here. Oh, this was the one that I really liked. And here we talked about this in the morning meeting. SPX 1 month realized vol is 6, which is at the first percentile rank on a 5-year look back. There is no vol. There is no volatility. As of this morning, there's approximately 16 billion explanations. That's the gamma number. Yeah. So, and you know, here's even a chart of that gamma, so it shows you that drop off that we had last month if you eyeball it really closely. But anyway, $16 billion worth of positive gamma. It's just massive. What does that mean? So first of all, market makers have never been long have never been this long SPX options gamma per 100 basis points. So basically, 100 basis point move in the market. It is estimated that $16 billion of E-minis are required to trade against the trend. So if you get the market to move up 1%, then you're getting $16 billion of automated trading that stems from this historically long gamma that we're in right now. So that equates to 60,000 E-mini futures to execute. You just can't get this market to move. Our future, and I guess this goes back to your question there, Rich. Our future strategist model suggests this long gamma will roll off by the middle of the month. To what? I'm not certain. But yeah, just great information here in Pat's note that is kind of helping us understand this market environment and why it is what it is. And for me, I take solace in that. You know, again, I have found this market to be pretty difficult recently. I don't think it's been a great environment really since June to trade. But I'm not pulling my hair out because it makes perfect sense when you understand the data of what's actually occurring with the market on a day-to-day basis. It makes absolute perfect sense that we're just stuck, and it makes sense that the Qs can uptick and the IWM can downtick in the same bar, and then that flips, and that there's that, you know, counter movement there. It makes sense that, you know, this was another thing that's just been frustrating the hell out of me, and it did it again today. Where did the equal weighted close? So SPY is up 0.13%. Where's the RSP? This actually tightened a little bit. RSP down 0.16%. So at one point, I think SPY was up 0.25% and RSP was down 0.25%, if I remember correctly. So it's just once again, it's like, you got NVIDIA? No? All right. Well, good luck. Good luck if you don't have NVIDIA, because if you're not in these few names, there's just nothing out there right now. But you know, with all my cynicism aside and frustrations about how this market has been trading, there have been opportunities that we've been able to identify every day. You know, we talked about Bank of America in the morning meeting today. We talked about Netflix in the morning meeting, but it was very tricky. We talked about NVIDIA in the morning meeting. It gave a great opening move before it failed. So there are some opportunities out there. You really got to pick your spots. But it's a mean reversion market. And again, what I was saying from an index perspective in the morning meeting today is, not only should you not be buying like the pattern that I mentioned from yesterday morning, which is normally, this is a great looking pattern, right? Small gap up, but we're continuing wedging, breaking higher. Not only should you not buy this pattern right now on an index level, you should expect it to fail, and you could potentially short it. Short the up moves, buy the down moves. I mean, this V bottom in the IWM at 1125 today was another just frustrating piece of price action, I thought. You know, that weakness from the IWM, it's still in its range, it's above $200, there's nothing going on here, and then you get that kind of almost random little volume spike, and that becomes your bottom at this random 11:25 a.m. time that ends this grind down and gives you new highs. But then the new highs lead to nothing. I'm pretty sure that there were traders out there who, when they saw the IWM turn green today and saw this move, go, okay, let's go, it looks like we're onto something. And then that fails and goes nowhere as well, just because, again, to repeat myself, that's the environment that we're in. So, you know, I apologize that I can't be more excited and say, hey, this environment's great, we're able to make so much money right now, but it's just part of the business. I can promise, and you know, you're not supposed to ever guarantee anything in finance and all this stuff. I can guarantee that there will be better environments, and that there will be, you know, periods of time where the environment's better and the trading opportunity is better. That's just how markets work. It's always an ebb and flow. It just happens that, you know, this period here, after coming out of a holiday week, but before CPI and before PPI, it's just very, very boring. And, you know, take it in stride. I was only half joking this morning when I said that we probably should finish the morning meeting and just keep our long swings and go to the beach, because it's where we're at. Hopefully it changes soon. So that's all that I've got. I'm happy to answer any questions that you guys have. Keen wants to know what the L means in the upper right hand corner of the level 2. If I type in TNA, I see it means hard to borrow. So it means if it's an E, it's easy to borrow. It means that you can just throw an offer out and you could easily short it like I just did. I don't want to get filled on that, so I want to cancel it. If it is a yellow L, it's hard to borrow. So look, I'll try to put an offer out right here and it won't let me do it because I didn't borrow the stock. But you can, if you're on Lightspeed, you can request to borrow here. So how much is it located on TNA? It would be 2.5 cents, so $2.50 per 100 shares. So if I wanted 100 shares, I would press accept. I don't, so I won't. And then you can borrow it. Occasionally you might see a red, what's the other one? A red T, I think. A red T means that it's impossible to borrow. You cannot get a borrow on it. So those are the 3 symbols that you can see in the upper right hand corner of your Lightspeed, and that is what they mean. So hope that helps. From Rex, trading ARM. Take a look. I got ARM from $163 last week. Very nice. From the daily bull flag breakout. My target has been 200-ish. When I took the trade, the market was also breaking out on the daily chart, so I'm going greedy on the target. And I have not sold anything after I covered my risk. I'm looking for a move to 200. Today the market is coming into day 6 and ARM is on day 4. The market is extended, and I know that the stock is less likely to go up today, but it hasn't reached my target. Would you say holding the position for the daily target without selling anything into extension is not appropriate? What would you do when it comes to daily target versus extension? Sure. So this is where it helps to be able to have enough tier size to be able to maneuver, to be able to maneuver and have a more flexible game plan. So if you have a very small tier size, if you don't have very much stock, you don't really have many options. It's either you hold for your target or you get out and potentially miss the move to your target, and that sucks. So having more stock is always better because you could do both. You could say, hey, it's really extended here from the ADMA. The market's extended. I'm going to take a percentage of my position off, but my game plan will be to rebuy it when the ADMA catches up, and I can keep the difference in terms of P&L. I love to do that myself. It's a strategy I call that like a cash flow strategy that I love to implement with my own trading. You have to recognize when you are buying a stock at $163 and that you are planning to sell it at 200 as your target, that it is very unlikely that you are going to get a straight move for $40 to the upside. I mean, that's a 20% move basically in the stock. It's very unlikely that you're just going to get a vertical 20% up move to your target. So if you are planning on just saying, hey, $200 is my target, you need to expect to ebb and flow into your P&L. So you need to expect that, yeah, this thing can get to $190, and then it could pull back 15 to 170, and then it could create a pivot low at 170 and go to 195, and then it could pull back to 182, and then it could go from 182 to 200. And that's assuming a best case scenario, right? I mean, I guess the best case scenario is pure momentum that instantly goes up 20%, then you're at your target. But I think it's unrealistic to expect that. Once in a while, you might get lucky and you'll get it, but most of the time, even if your idea is right, that's not going to be how it plays out, right? It's going to be an ebb and a flow from that 160 all the way to 200, where at certain points your P&L will be higher because the stock is higher, and at certain points your P&L is going to pull back, and you're going to have to give some back, and you have to be prepared for that. So to circle back to your question, if you're putting on a game plan with such a lofty target, and by the way, I love that. I love the greed. I love the fact that you're going for it. I love the reward potential that you're trying to give yourself off your risk. I really do think that that's how you make money. But you have to have realistic expectations. First of all, not impossible for your stock to go to $190 then completely fail, right? Especially if the market weakens out or whatever. You have to be prepared for that. So there is a chance here, if you've covered nothing except your risk, that you still go home with a donut. You, right now, need to be comfortable giving this thing back, assuming you're still using your original stop loss, $20, and getting stopped out for $0. If you're not comfortable with that, it means you had a bad game plan to begin with. This is also where you can implement trailing strategies. If you get that higher low, which hasn't happened yet because it has pretty much been straight up so far, you can, raise your stop to that higher low and lock in some additional P&L for yourself. But really, what I like to do is kind of combine your thought process with my kind of cash flow approach to trading, which is basically saying, hey, my stock had a really big move, it's extended, it should pull back. Even if I'm right and it goes to 200, it should pull back $10 or $15, create that pivot low, and then go. So what I'm going to do is I'm going to take some off the table. I'm going to put it in my pocket. No, I'm not going to take it all off the table because maybe you do get that straight momentum move to $200. But I'm going to take some off the table, and I'll look to rebuy it. And then no matter what, let's say the stock pulls back to 175, you rebuy it, but then it doesn't work, it just fails. Well, at least you kept the $10 difference. You sold at 185, you rebought at 175, you get stopped out because the trade fails. You made that $10 difference, so you didn't make a zero anymore. You actually were able to make some P&L in between. That's the way that I love to do it. So again, you either need to be comfortable with the fact that you could give it all back because you're max greed mode looking for that whole huge move, or both. But I do think that you should stick to the game plan that you created when you initially got into the trade. I'm always a big stickler for that, I think, as you know. That's kind of my thought process. I love doing that kind of cash flow trading, taking some off into extension or taking some off in increments and kind of rebuying it. It kind of saved me a little bit with this SEDG today. Got in this SEDG yesterday when it had the upgrade. Traded it well, was able to capture this move. I traded all back and forth here, so I had a ton of kind of cash flow executions based on my game plan. Today, it broke yesterday's low, which means that I if I didn't trade it the way that I did, my P&L would have been negative and I would have had to stop myself out. But I traded it so well that even at lows today, I was still positive in this thing, even though it was trading below where I bought my stock. But I traded it well enough that I was able to keep it, so I didn't get stopped out. And then I was able to capture this move up, which just enabled me to trade it even more and put even more money in my pocket. So that's why I love to do that. I mean, you can see my executions in this thing here today, just buying and selling and buying and selling and buying and selling. But all of those buys and sells are just adding in additional P&L into my pocket, so that if it fails, this goes back. I've talked about this in the past also. I could keep the original stop loss, and if it fails, I could make the difference, which is what I'm just telling you based on your question on what you could do. Or what I've been doing more of, because I'm also a fairly greedy trader in some ways like yourself, Rex, is I've been saying to myself with this SEDG, I want to make nothing in it. I want to make zero in it, or have a really, really big P&L in it. So what I'm going to do is, as I make money from kind of the cash flow trading of it, I'm going to continue to lower my stop to keep it at P&L 0. And I'll get out if my P&L is either back at 0, which will be a number that increasingly goes down as long as I don't get stopped out, or it just works and I end up making a lot in it. So hope that helps, Rex. I appreciate the question. From Victor, maybe a silly question, but I've noticed that when we get extended or oversold on the 15-minute chart, we are very likely to bounce. It worked today on the IWM. Sure. Yeah, for sure. I think that something like this only works because of the gamma environment you mentioned. Not necessarily. So the gamma aspect of it certainly helps. You know that in a positive gamma environment, that's going to tend to be more intraday mean reverting. If you have a negative environment, a negative gamma environment, it tends to be more conducive to continuation of trend and continuation of momentum. So in a large positive gamma environment like we're in right now, it makes more sense to implement range style trades and look for mean reversion. In a negative gamma environment, it makes more sense to look for trend continuation. That's not to say that you can't get a range day in a negative gamma environment or a trend day in a positive gamma environment. You can. I'm strictly talking about likelihoods. But the other thing is time of day, right? We talk about different times of day with different charts and extension. Once it's, after 10 a.m., it becomes very difficult for a stock to maintain or an index to maintain a lot of extension on a 5-minute chart. So if you have a lot of extension on a 5-minute chart and it's passing 10 a.m., you can look more for the bounce trade. If it's downside extension, you can look more for that bounce trade to come in. Then when you get to post 10:30 and you have a lot of extension on a 15-minute chart, you can look more for that bounce trade to come in. It's very difficult for a 5-minute chart to continue to stay extended all the way through noon and never touch its 80 EMA on the 5 minutes. It's very difficult. It's not impossible. It's very difficult. It's very difficult for a 15-minute chart to stay extended through the entire day. So that's why we pay attention to those time frames. If I'm seeing a lot of 5-minute extension at 10 a.m., I tend to look for those bounce trades, those counter trend trades. If I'm seeing a lot of 15-minute extension at 11 a.m., I tend to look for those bounce trades. I tend to look for those counter trend trades just for a bounce back to the 80 EMA. And then if it's a positive gamma environment, might overshoot it, and just because that's how ranges work. If it's a negative gamma environment, you'll still probably get that bounce, but then you'll get the pivot high for trend continuation. So yeah, it's absolutely an additional layer of probability that you want to think about when you're looking at trend and extension on trades. And it also goes back to what I was saying this morning about how when you get a nice looking pattern like we had yesterday morning in the SPY, don't expect continuation because it's probably going to mean revert. So thanks for the question, Victor. Over to the YouTube from Cyril. The IWM is still weak, but today's midday bounce was quite good. It was good. It was good, but then it did nothing. Would have loved to get even just sideways price action here, let alone some follow through. The degree of the roll down from this peak I thought was a little bit disappointing. From Kevin, after about 12 p.m. indexes, futures seem to be more difficult to trade right now. Yeah, I mean, I've always found the midday trading sessions to be very difficult. If anything, there might be more opportunity midday now because we're seeing so many midday V bottoms, which is also a new factor of the modern market environment that we're finding ourselves in that didn't used to previously exist. So you can look for that mean reversion. You can look for those pivot lows midday sometimes, but it's still not necessarily an easy trade because it's like, is it going to happen at 11:25? Is it going to happen at 1:25? Kind of hard to say. So I find more success having shorter trades in the uncertain environment, some more like scalping. Yeah. So again, there are individual stocks, like if we just look at ARM with Rex, that are giving trend and are giving follow through. I mean, look at ARM, look at Apple. They're definitely there. But especially if you're thinking from an index perspective, it's just difficult to get follow through right now. So therefore, holding a large percentage for the big move doesn't make as much sense as scalping a little more, taking more profit more quickly, and that's also what I was doing today. We did take a couple small call outs. At least I did. I called out this SEDG long back through 26 here. I dumped all that by 26.60. I took like a bigger extra buy there at 26. I would say that I dumped 70% of it by 26.30, something like that, and 100% of it by 26.60, and I'm out. Path was another one. We tried Path here with the maximizing volume through 12, or like kind of back through 12, just for like a bounce to the 80 MA. I'm not looking for anything. I'm not looking for much. I got out of 100% of what I bought by 12.12, just not a great risk reward on a counter trend trade. To be honest, even looking at this in hindsight, I don't know if it was worth it. I don't know if it was worth the stress of taking that trade, but it also didn't correct well because it time corrected for 10 minutes before giving a little bit of a bounce. But I'm not being greedy right now on stuff like that. You know, initially I wanted more because there was extension to this ADMA. It time corrects for 10 minutes. The ADMA is moving down. And I'm just saying in the VTF, bringing down my profit targets, bringing down my offers. I'm not being greedy. I'm not being stubborn with, you know, I think originally I probably had some offers in the low 1220s when I first bought this. And I'm not being stubborn with it. If all I can expect is that move to the ADMA, I'm just bringing those offers down, and I'm just taking it as it can give me, and I'm kind of moving on from it. So I've been doing a few trades like that. I don't think it's easy money, to be honest. It made me a few bucks, but it's not preferable. It's not a preferable way to trade. So I'm being real risk averse and stopping myself out on stuff and taking the profits really quick on things and being selective, and it's been able to make me some money, but it's you know, it's not really, again, this probably goes back to my frustrations. It's not the risk rewards that I'm looking for, really. I'm taking what the market environment gives me because I can't dictate to the market what it should do. I need to listen to the message of what the market is telling me, and the market is telling me that this is not an environment to be generally very greedy right now, even if it's my preferred way to trade, and even if there are, like with ARM or Apple, you know, some bigger moves out there that you can capture if you really get the right names. All right. Anything else, ladies and gentlemen? Bezos sold 6 million shares out of the 25 million that he's looking to sell so far, something like that. Okay, it's good to know. It's gonna be hard, I think, for Amazon to really break through that 200. I know there's a little bit of excitement here when the volume picked up at 225, but he's just selling right into that. So really hard to be looking for this Amazon breakout through 200 when we know that he still has 19 million shares of stock to sell. Gotcha. And he looks like, yeah, looks like he's trying to get good prices on it. You got a 75% of your Palantir today from Uvixi Bull. You were long, right? Yeah, I'm fully out. I mean, I'm definitely interested in rebuying a dip, but I think this move got a little bit ahead of itself. It was a good uptrend for sure. All right, well, I'm gonna end it there. Hope everybody, you know, had a good day, and I think a good day today just means that you're looking at your volume, and your traded volume is a little bit lower than it, you know, is on an average day, and that your P&L swings were a little bit more muted than they are on an average day. And again, it's not what we want, but that's the right thing to be doing in this environment until it improves, and it will improve. It's always a matter of time. It's just how markets cycle. They cycle into better and worser environments over time. Worse is not a word, but if I use it and you understand it, then it is. So have a great night, everybody. See you all tomorrow. Thanks again.